Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Hello. Good morning, everyone. This is Kathy. I don't know why my camera's a little blurry this morning. Give me 1 second. Maybe that will fix things. I'm sure it'll normalize itself. Now this is bothering me a little bit. Let me stop cam, reopen it. Okay, good morning, everyone. I am not sure why my screen is blurry, but can you see me? And you can hear me? Yeah, I know it's focused. I don't know what's going on. And, Boris will tell you that I'm the most technically inept person. So aside from possibly unplugging my camera and replugging it in, I'm not sure what else I can do. But I think, let me see. Give me 1 second. All right. Let me see if I can open up maybe some filters. Let me see if I can open up my Logitech software. My camera is very fuzzy and I can't get it. Could you unplug it and replug it back in or no?
It's fine now.
Oh, fabulous. This is this is story of tech support, right? Once you call tech support in, the problem instantly disappears. I mean, how many of you actually had that experience? As soon as you bring tech support in, the problem that you had instantly disappears. It's that happens to me all the time. All right, welcome everyone. We have so much to talk about this morning. There's a lot going on in the markets. There's a little less going on in the calendar. But there's a lot that I want to talk about, which I think some things you might actually find interesting in regards to the number one driver of market movements right now. I'm going to throw the microphone to you, and I want you to tell me what is the number one driver of market flows in the market this week. What are we waiting for? What are we watching? Let's see who's paying attention. Yes, oil's a driver, but that's not really the story, right? Yes, the war is the story, but there's something in particular that we are all waiting on. And let me see if I get any comments here. Israel-Iran war. Yes, you guys all are hitting on the right points. And of course, none of you are saying tariffs, which is 100% true, because tariffs was supposed to be the number one driver of market flows. But Thomason is absolutely correct, although it's not Iran's strait. The Strait of Hormuz is, let me just make sure I'm not missing any breaking headlines. Yes. Cheryl, the Strait of Hormuz. What is this? Geeky says the Trump tweet. I wish it was only about Powell's speech this week, HMH, but really it is exactly what all of our other friends have been talking about, which is the Strait of Hormuz. Less so the Trump tweet. Can't imagine anything new he'll say right at this moment. And then waiting for Iran's response, because they have the Strait of Hormuz, which you may or may not know, is this tiny little area over here. Let me show you my map. It's this tiny little area over here that is 20 miles long. And this 20-mile stretch, or 20 miles of width, and this 20-mile stretch at its narrowest point is, what is at the center of this conflict right now, because 20% of the world's oil supply goes through this narrow strait. And it goes through it every single day. That's over 20 million barrels of oil. So we know that the Iranian parliament has voted to block the Strait of Hormuz, but it still needs to be approved by the supreme leader and it still needs to be approved by the Supreme National Council. And so far, we haven't heard any word on that. And some people are arguing this is not even Iran Strait to close. But, they could certainly attack, defend it, prevent ships from going through it. And this is the worry of the markets. There's been a lot of threats in the past 3 decades to close this tiny little stretch. And the last time it was closed was in 1972. So right now it has not been closed yet, but if it does, it has serious ramifications for not only for the oil market, which therefore has serious ramifications for interest rate policy, for growth, for inflation, all of which we are going to talk about today. Boris looks like he wants to say something.
Yeah, a few things I want to chime in on Strait of Hormuz because I've become a little bit of a semi-expert over the weekend on the subject matter. A couple of things you need to keep in mind. First of all, only 7% of oil that affects the United States flows through Strait of Hormuz. However, 80% of oil that affects Qatar and China flows through Strait of Hormuz. China is, of course, Iran's biggest diplomatic partner. So the country that would hurt the most if they were to even attempt the blockade of Strait of Hormuz would be actually China, which would actually be very catastrophic for them because it would literally cut off the artery of their energy consumption, which is basically flowing through there. Secondly, as Kathy had already mentioned, sorry, all my alarms are going off. As Kathy had already mentioned, half the Strait of Hormuz is really under Oman's territory. So they are going to have to essentially try to, butt in on Oman's territorial waters. But third, and I think most important, is perhaps the best thing that could happen to geopolitics is if they attempt to block the Strait of Hormuz. Because if they do that, the full force of the U.S. Navy and Israeli Air Force will fall upon them, and their whole Navy will be decimated within 48 hours. This will absolutely create a regime change at that point. This is why I don't think they really want to do this. They understand this is their last stance, and if all of their naval assets are destroyed, they're going to be completely and totally absent of any military might whatsoever. And that will absolutely happen if they even begin to try to blockade the Strait of Hormuz. Secondly, because Israel has complete air superiority and they have not touched it, all of their refining capacity is on Karg Island. If they blow that up, Iran basically starves of revenue instantaneously. So I think, the mullahs are trying to make a calculation of how they can stay alive. This is all posturing. But if they actually do it, instead of being a massive geopolitical risk, it will probably be the single best geopolitical factor there is, because it means for sure Iran is going to fall, become pro-Western, and oil is going to flow like a spigot from it down the road. So that's sort of my read on the situation after having read a lot.
Well, I mean, that's certainly Boris's opinion on how it's going to play out. But in terms of U.S., the U.S. is not immune. As Boris mentioned, 7% of oil from the U.S. comes from the region. And it's true, most of U.S. imports of oil come from Canada and Mexico. But that's not how oil pricing works. Oil is global. And even though the U.S. may import very little oil from this part of the world, if you imagine if oil prices spike, airline fares, gasoline fares, shipping costs are going to increase across the globe. So if, for example, Air France, Alitalia, Aegean Air, or Qatar Air, all of them raise their prices, what do you think Delta and American are going to do? They're going to raise their prices as well. Maybe they get some of their oil from abroad. Maybe they just want to make more money. Prices are going to go up across the globe, and Americans will not be immune to that. And this is where I think is very, very important, because, the price of oil, certainly very, very important to everything that, the world does. And, it is estimated by many of the major banks that if the Strait of Hormuz is closed, we will not only see $100 oil, but we could see $120, $130 oil. But I think the most important takeaway from this is that if we get an increase in oil prices, that is going to kill the chance of a Federal Reserve interest rate cut, because the Federal Reserve who is already reluctant to cut interest rates, is going to find it incredibly difficult to cut interest rates in the face of rising inflation. And so this is one of the most important things I want you to take away from this, because this morning, the U.S., some of the things that we're seeing as a consequence of the possibility of Strait of Hormuz being closed and the U.S. attack on Iran is that we are seeing oil prices rise, somewhat, not as much of a spike as we would imagine, but the U.S. dollar is also up across the board. And the U.S. dollar is up across the board for two reasons. Number one, it's up across the board because we have safe haven flows into the greenback. Whenever we do, this is not like tariffs. If you join me before and we've talked about the tariffs, we talked about how tariff announcements tend to drive the U.S. dollar down, not up, because people think that there's going to be more consequences for the U.S. economy. But in the case of war, in the case of tensions, the dollar is very much indeed a safe haven. So number one, the dollar's up because of safe haven. But number two, I think more importantly, is this implication for Federal Reserve rate cuts. Because one of the main reasons why the dollar's been up and down and moving, all around this year is because the market has been shifting its expectations for the number of interest rate cuts they expect from the Federal Reserve. So last week, there was some excitement from Fed Governor Waller, who suggested that he's expected to be the successor to Powell. Governor Waller suggested that they could cut interest rates as soon as next month. And so this kind of really puts that, into question. Now, September is still some time away, and there could still just be one interest rate cut. But it is believed that for every $10 increase in oil prices, it adds a 0.2% in inflation. So, if this closure goes through, U.S. inflation could spike to 4-5% by the summer. And as I said, the Fed cannot cut interest rates into a spike in inflation, especially since they've been so concerned about inflation. And if you remember back in during COVID, they had all been saying inflation is not going to last, it's going to come down, the effects are temporary. Their thought process on all of this has changed since then. They realize that inflation, once it gets sticky, is very, very hard to come down. And so that's why they've been, especially the Federal Reserve, has been so reluctant to cut interest rates. And now if oil prices do go to $100 a barrel, and if the Strait of Hormuz is closed, it will go to 120, 130. That is going to make not only the Federal Reserve reluctant to cut interest rates, but it's going to pretty much end all interest rate cut plans by many, many central banks. And so that, from an economic perspective, from a policy perspective, from interest rate perspective, from a stock perspective, I think is one of the most important takeaways. And that also poses one of the greatest risks for stocks, right? Because if interest rate cuts are not coming, then that also poses is bearish for stocks, because you've got oil prices rising, you've got interest rate cuts not coming. So all of that, I think, is what I think is the number one takeaway from this risk, this tension. Now, of course, none of that has been clarified, I guess is the better word. None of that has been clarified. Maybe, as John Mason points out, 48 hours, it could be clarified. But right now, we don't know.
John is making a funny on my comment. I said it'll take 48 hours before the whole Iranian Navy is annihilated. And he's saying 48 hours will probably take 4. I agree. Kathy's doomsday scenario is very realistic if the Iranian Navy is able to put that into effect, right? That's the key thing. The big thing is if they really have more assets and are much more tenacious than anybody thinks they are, and actually able to create disturbance, yes. If they try to do this and they're blown out of the water, it's actually an incredibly bullish scenario and not a bearish one all across the world. So I just want everybody to understand that there's two balances here. You need to understand how it's going to play out depending on what actually happens on the ground. So that's what you need to keep in mind.
That's another really good point that Boris made, which I think we talked about last week. And I certainly did this in one of the videos, which is that the most important thing to remember, and Boris and I have lived, for not a very long time, but we lived through a lot of this.
Too
is
long
that
a
the
time.
war trade is temporary, and then the bounce back happens much quicker than the resolution to the war. So while boots in previous wars, boots on the ground may have remained for a long period of time, the prospect of the anxiety and agitation around the region subsiding can lead to a faster, quicker recovery in the markets if there's something happens than the fall. So the war trade, the point I want to make is the war trade is oftentimes temporary, and the war trade is oftentimes short-lived. And that's kind of leads me into talking a little bit about price action. I'm going to remove my zip trades. We're just going to look at the pure charts. Now, Sunday, I posted this on Sunday, and if you have joined us in the past, Sunday, we had a gap, right? This is just a Eurodollar chart. And so the news is big. The U.S. attacked Iran. Iran is threatening to close the Strait of Hormuz. The news is big. The consequences are severe. Emotionally, most of us think, what should we do? It sounds like a really big deal. We should sit, and it's a huge gap because the market seems to think it's a really big deal. So emotionally, instinctively, impulsively, most people think, let's sell. And in some ways you can see a similar story in oil. This is a really big deal. The tensions in the Middle East have escalated. This looks like it's going to get a lot worse before it gets better. So emotionally, impulsively, instinctively, oil spikes. What do you think you should do? Buy. But guess what happens? What do you know about gaps? What do I want you to know about gaps? Someone chime in, because I think maybe some of you may have watched the short that I reposted on the weekend. What should we have laser seared into our brains as traders when we see a gap? First one to answer is my VIP of the day. What do you think? Should you?
It's what they say on the London Tube. What's the motto of the London Tube? That's right. Fred has got it. Gaps fill. Another mutant says gaps close. Right. Mind the gap. Gaps generally tend to fill. Exactly right.
I am so happy to see all of you understand this because, we see this today. We may see it again. We often see gaps, and you should have it seared into your brains that gaps. Oh, I don't know what the percent is, Boris. I don't know if you know a percent, but let's say
I've heard like somewhere within 80 to 90% on the sort of weekend opening gap. Having said this though, when it doesn't, right? So when it doesn't fill, which is very rare, that 10% of the situation, then it's a straight moonshot, thing. I remember the last time I remember a gap not filling was when we had European elections and Euro opened up really, really high up and it never filled the gap and it just ran for like a 1,000 points after that. But that's very rare. Carrie is right. 89% of the time, they're going to fill.
So 80, 90, if your mind, as a trader, if there's one thing you take away from today, because you will see this again, I promise you, because maybe because of the war, maybe because of something else that happens, you will see these Sunday gaps again. The one thing you should always remember is that gaps are always with an asterisk, 80, 90% time, which is good enough odds for me, are almost always filled. So while emotionally, impulsively, instinctively, you want to buy oil because this is such a big deal, such a big news. Everyone's telling you oil is going to 100, 130, and that may be true. But as a trader, first things first is that the gaps will almost always be filled. And only then when we see what happens around the stabilization, do you get to maybe buy it at a cheaper level heading towards 100. So while fundamentally the story could still drive oil to 100, as a trader, trading Sunday gaps, the one thing you should know is that gaps will always be filled. So hopefully you knew this when you saw Sunday's gap, or you watched my short that I posted on Sunday, or now you know it going forward, that Sunday gaps are always filled. So as a trader, this is the one thing that I want you to take away, because we saw this in oil. We saw this in stocks. This gap was filled. We saw this in euro. We saw this in dollar. We even saw this in dollar yen, where this was a relatively mild move. Hold on, I've got my chats blowing up. I got to mute this thing. Hold on. We've got even a mild move that then blew up to the upside. That gaps are always filled. So one of my friends, and I know we're jumping all over the place here because there's just so much to talk about. What Fred asked, we're talking about what yen. Here, Thomason, and thank you so much, Fred, for answering Thomason's question. But I want to talk about this to everyone because I think many of you are wondering. Japanese yen is supposed to be a safe haven. Why in the world is it mostly down? It's down today, not up. Who's confused? If you're confused, raise your hand or put in question marks into the box. If you're confused about why the yen is down and not up today, raise your hand. Let me know. Otherwise, I'm going to assume that you know, and I'm just going to move on. Steven says oil. Yes, but how? Some of you may be confused. Maxie wants me to talk about this, to explain this. Alvin does. Good. I want to talk about this and explain this. Why is the yen down? Kathy has told me that safe haven currencies in the times of crisis, when people liquidate, they buy dollar, they buy Swiss francs, they buy yen. But Swiss franc is flat, yen is down a lot. So why is this the case? Now, there are a couple of reasons. Kathy also told me that, if oil prices continue to spike, that inflation would rise. So Kathy told me previously that the Bank of Japan wants to raise interest rates. Would this not drive inflation in Japan higher and cause them to raise interest rates? The answer is no. The answer is no for a couple of reasons. For one main reason, which some of you are touching on. First off, the Japanese economic data has been really, really bad. And so this actually creates more headaches for Japan than there's no benefits, right? It basically creates more headaches because Japan is finding it difficult. The reason why Japan is finding it difficult to raise interest rates is because data has been taking a turn for the worse. And so oil, Japan imports pretty much all of its oil. So this is going to raise the cost of everything domestically, not just what they pay for oil, all the food and everything else that is going to raise the cost. So yes, inflation is going to go up. It's also going to create a greater burden for Japan. So if you imagine Japan's economy is dealing with tariffs, they're dealing with higher oil prices, they're dealing with the auto industry getting crushed. These three factors is why people are seeing this spike in oil, or the potential spike in oil, and the conflict in the Middle East actually be kind of the nail in the coffin for Japan's economy. So that is why the yen is the worst performing currency today, because people feel, no, this is not going to make the Bank of Japan raise interest rates. This is actually going to cause more strain and stress to Japan's economy, and it's going to lead to further weakness in Japanese data. And so they drove the yen lower across the board. Of course, this is also a US dollar story, right? Because we started this conversation talking about how investors flocked into the safety of the US dollar. Stocks have now turned positive, stock futures. Oil has gone negative. So we're not seeing as much of the effect in the other markets. And maybe it's because, as Boris talked about earlier, people do not think that Iran is actually going to close the Strait of Hormuz. But regardless, the one instrument that's held on to its move is the dollar. And the dollar is still up across the board. So it is also the yen's weakness is also a US dollar story. But it has much more, because I guess the best way to say is Japan's economy is so down in the dumps and there's been so much stress on it. The higher oil prices in light of tariffs, auto tariffs, reciprocal tariffs, weaker economic data, rice prices through the roof. I mean, not too many people are talking about this, but rice prices, I think, are a 3-year high. And we all know rice is like the foundation of Japan's food source. And so it's what everyone in Japan eats. And so this is creating a huge strain on the economy. And all of that is leading to the moves. Team's craziness is bringing up a point. Let's see what he's saying. Japan is the largest investor in the U.S. over the weekend. 2 countries are saying they plan to repatriate their reserves in U.S. and BRICS. Gold-backed currency ignite fear. Yes, that may be the case. Okay, so this is the backdrop. Whenever we walk into a new trading week, we always have to talk about what is the theme of the week. Because while data may matter, while fundamentals may matter, it's really the sentiment, the theme, and the story that drives market flows. And so the biggest number one story this week is the conflict in Iran. And it is, very, very interesting that if you look at the other markets, we are not seeing like S&P futures have turned positive. And oil, which, is what everyone's watching, oil, let's see if we can get this oil chart going. Oil has completely erased its gains as moving into negative territory. And, perhaps Boris is right. And maybe President Trump is right, where this could strong arm Iran into some sort of diplomatic solution. Maybe it could strong arm Iran into some sort of diplomatic solution. Maybe it create a proxy war with Russia and China. I can tell you, I don't know. But right now, the market is waiting. It's still waiting with bated breath. So while Powell's comments may be important this week, while data may be important, certainly if we get some tariff-related headlines, it'll probably be important as well. You can see from the market movements that it's waiting for something. And that something is either, Iran officially saying they're closing the Strait of Hormuz, them not doing it, maybe them coming to the table. I don't know what's going to happen. I could stop, trying to predict any of this. I'm certainly not a political expert or commentator, but I know from the market perspective that it's waiting. So when we have this happen, usually there's going to be more of, just imagine there's going to be more caution, I guess, than optimism. And that caution will prevent, in my opinion, any meaningful rallies in stocks, any meaningful pullbacks in oil, and any meaningful slide in the US dollar. And I think when we hear from Powell, who begins his semi-annual testimony on the economy and monetary policy tomorrow, of course, he's probably going to express some concerns about the uncertainty. But maybe, he may also express some concerns about inflation and the upside risk to inflation. So, his speech tomorrow will be important. If he's smart, because no one knows what's going to happen, he's going to say nothing and just repeat what he said in his press conference after the FOMC meeting last week. But that makes tomorrow's speech very important. In fact, we don't have much in the way of U.S. data this week. We only have the personal income, personal spending data, and PCE deflator at the end of the week. So really, it's going to be about what happens in the Middle East, Powell's speech tomorrow, and then if we get any headlines on tariffs. I don't know if Trump is going to be distracted by the situation in Iran to really, push for tariffs. Maybe he could distract the markets from the situation in Iran with tariff announcements. Once again, I've stopped predicting him. But for the time being, the market impact is dollar bullish. And I remain dollar bullish. And I think that, I don't think Powell is going to say anything tomorrow that's really going to drive the dollar much lower. We have a question from Goriola. Won't PMI later today be market moving? This is the S&P PMI. So the other countries like Eurozone, UK, Australia, they only really have just the S&P market PMIs. This is their only number. But in the US, we have ISM. ISM is much more important and much more market moving than the S&P PMIs. So it's a little bit, but the market really doesn't pay that much attention to the S&P PMIs. By the way, Boris, if you don't mind dropping a link to our community, if you want to stay on top of all of this, join our free community. We're talking about this every single day. You can ask questions there. I'm posting videos, and you get much more than the Monday outlook. We learn, prepare to trade every single day with our videos and our trading plan. So this is our free trading community. But I'm dollar bullish. I think that the dollar, is probably going to, it's been deeply oversold, obviously. So these are a lot of factors that could drive the dollar higher this week. Euro, I'm neutral because, Eurozone PMIs were released this morning, and PMIs are the most important piece of data for the Eurozone. And they were kind of mixed. I mean, the Eurozone manufacturing PMI was stronger. The German data was better. The French data was weaker. Overall, what's really one of the reasons why the euro has performed so well is because the ECB is nearing the end of their easing cycle, whereas the Federal Reserve is they're not at the beginning, but a lot more rate cuts are expected to come from the Federal Reserve. May it be Q4, Q1 of next year, than the ECB. The ECB is only expected to have one more interest rate cut in their cycle. And that is supported by recent improvements in Eurozone data. So I'm really actually bullish euros, which is why you see neutral. But I can't ignore the fact that the euro is going to be negatively affected by any safe haven flows into the US dollar. So this says neutral, but I'm actually neutral bullish. And for those of you that are BK members, there's a lot of information in each of these tiles that provides you the information. And if you want to learn how to become a BK member, just hit that link, join our free community. You got lots of great information, including free courses, but you can also find out how to become a BK member. So I'm bearish pounds. Last week we had a Bank of England meeting. They left interest rates unchanged, but more members voted in favor of an interest rate cut. Unlike the Eurozone, data has been worsening, not improving. So I think, pound is going to feel more pain than euro. And so, yes, I'm bearish sterling. We had the PMIs released this morning, and I think they were slightly better, but in general, that's the only piece of data that we have aside from GDP on Friday. I think most of it is going to weigh on sterling. Australia also released PMI numbers. I think this is the only piece of Australian PMIs is the only piece of data from Australia this week. And taking a look at the calendar, you can see that Australian PMIs were slightly better than expected. I mean, for the most part, most of the PMIs were slightly better. Although, at 47.7, this is still very weak numbers for the UK. But the RBA is still looking to cut interest rates. Aussie and Kiwi are the worst performing currencies because, they are so sensitive to global growth. And they are also still looking, the economy domestically is weakening. They're still looking to basically support the economy with more stimulus. This is a really interesting comment from Tame Craziness. Let me read this. Qatar is cautioning U.S. citizens to shelter in place this morning. This may force U.S. further into the Israel-Iran war. I actually read this initially when I saw it in the corner of my eyes, that they were cautioning all citizens. That's definitely a risk that's happening. So Aussie, I'm bearish Aussies. I think, that all of this uncertainty is Aussie is a risk currency. So when we have stocks falling, which, have kind of turned positive, that it is more negative than positive for Aussie. CAD, I'm still bullish. CAD is, I guess in some ways you could say, the best performer among the weakness because, because higher oil prices is going to benefit Canada. And the Canadian dollar, there's been, data hasn't been terrible and it's been firmer than some of the other currencies. This is another reason for the Canadian dollar to hold on to its gains. We have inflation data, though, from Canada this week and GDP numbers, and there could be a little weaker. I'm still bullish CAD, though, because if we look at the dollar CAD chart, you will see that, dollar CAD on a daily basis is so oversold. And if I put in my moving average charts, it's so oversold. There is a lot of room, even though we're stopping right at the 50 SMA, there's still, once you get past we close above the 50 SMA on dollar CAD, it's almost clear sailing all the way up to 140.25, for example. So all we need is a close above 138, probably 138.25, and we could certainly see a move higher. But for the time being, if we stay below it, it could reject it right there. Kiwi, I'm bearish. I don't think we have much going on for Kiwi at all. We only have the trade balance later this week. So this is really going to trade on risk off flows. Swiss franc, I'm bearish. SNB cut interest rates last week and said they are open to negative rates. Their rates are 0 again. So that's going to weigh on the Swiss franc. And then the yen, I'm neutral. I'm neutral bearish, but we're going to have to see, how things really move, because dollar yen has already had a bit move, but I'm definitely neutral bearish. And I think dollar yen could easily get up to 148.95. Now, taking a look at the day-by-day individual data, we have a lot of Fed speak today. We had PMIs. PMIs were mostly stronger across the board, except for the French data that was weaker. We have more Fed speak today. We have tonight Japanese inflation data. PMIs from Japan was good. We have Canadian inflation data, which the market actually expects to be hotter. And then we have Powell testifying tomorrow, Powell and BOE governor. So, that's going to be very, very important at 10 a.m. We also have U.S. consumer confidence numbers. And then we have the New Zealand trade data. Wednesday, another speech from Powell. The second speech from Powell is always less interesting than the first one. It's usually the first one where he speaks at 10 a.m. and then he delivers his prepared testimony. And then usually the most important questions asked are in the first 15 minutes. And then we get the real takeaways from the day if he wants to say anything interesting. We also have Australian inflation data. Thursday, we have durable goods, not a huge market mover, but the market still kind of pays attention to that. We do have the jobless claims. And then we have some Japanese data dump, industrial production, retail sales, the unemployment rate, inflation data. And Friday is the only piece of market moving data from U.S., which is personal income, personal spending, and the core PCE. And then from Canada, from GDP. So at the end of the day, we don't really, aside from the PMIs, we don't really have market moving data. I missed the IFO report from Germany tomorrow, but so that's going to be important as well, the IFO report. But in general, data-wise, it's really the PMIs, which are already out, which are slightly better, that is important. And then, of course, inflation data from Canada. Everything else is a sideshow. It's just going to be what Powell says tomorrow, and then this evolving situation in the Middle East. So I'm going to do my best to try to kind of keep you guys all updated. Make sure you join our free community so you can watch the videos, because it's going to be an evolving situation. And, it can change at any point in time. But for now, dollar bullish. This is an ugly reversal candle in euro dollar, but it does need to drop below the 20 SMA. Dollar Swiss, signs of basing here. And, I think the dollar Swiss is going to continue to move higher because it's deeply oversold, and I'm dollar bullish. Dollar Swiss is indeed trailing behind dollar yen, which looks like it has more room to move to the upside. Dollar CAD, we'll have to see. You got the dual factors tug of war between dollar and CAD, which is why perhaps the CAD opportunity is better. I mean, look at this. CAD yen is above all of the major moving averages. And so this is a pretty bullish story. Or you can argue, for example, Aussie CAD below all of the major moving averages. This is why I love to see, looks like we could have a much more significant sell-off in Aussie CAD. So dollar CAD is not the only CAD trade, is the point I want to make. And I'm bullish CAD, but the crosses may be better than the majors. And I love trading the crosses. I think that they have the best opportunities. Pound dollar breaking below the 50. If we close below this, we could easily see a move down to 132.50 and lower. Aussie, we've got some support at the 100 SMA. Moving average, 100 SMA is a very important support level. Kiwi dollar looks like it has more room to fall down to at least 58.35 for the 100 SMA. So a lot going on this week, but as I said, it's all going to be based on headline risk. So that is the most important thing. So make sure you join our trading communities so that we can keep you updated, and you can ask us questions throughout the week and not just wait till our Monday trade, because there's such an evolving situation. So all you need to do is click on this link. Boris, where's the link for the community? You guys have so many eager comments here. Boris is going to live trade in just a minute. He's going to join us if you want to join us. So hit that link. I know that you can't paste it, unfortunately, but it's just, and so all you need to do, just go to bit.ly. Let me see if it works. Join.
You can, you can post that on your Twitter, Kay, if you like, and they can.
I will. I just want to show them how to join the community and copy that link. Let's see if that works. Now I have to put all the little pieces on it. So I have to do http:// join BK Traders. I think that's right?
Yeah.
You sure that's right, Boris?
It's the right link.
You want to put it in Discord for me real quick so that I can put it in?
But
yeah, you'll then be launched into our trading community. Let's see if I'm logged in here. Right. Then you'll be launched into our trading community, which looks like this. And you get lots of really great stuff here. Oil price spike moves, lots of traders waiting on Tehran response. And this is all free, my friends. So make sure you are taking advantage of that and, joining the free trading community. This is, Boris just gave me the link. So if you pasted the link, let me see if I can paste it in here. I might actually just paste the link there. And then you click on Get Instant Access. Fill out this information. Let me in. And then it will get you, put your first name, last name, email. Check that box. Let me in. And it will get you into the trading community. All right. Boris is here. He's saying hello. This is completely free, JBC. So please feel free to join it. Questions? Yes, Boris is here. We're live trading. We had a question about, I just got the screenshot. I pasted that link into my browser. So you should have exactly what I have in there.
I'm putting the link. I'm putting the link into chat again. So just simply copy paste the link from chat.
Here's the direct link as well. Otherwise, Boris is going to be trading trading NASDAQ and maybe gold.
Trading NASDAQ and gold.
And let me see if there's any other questions. You want to grab the screen, Boris? Am I bullish on the Chinese yuan?
Yeah, Kay, I'm going to have to just bear with me a sec. So I'm on very, very funky little Wi-Fi. Unfortunately, I was trying to get off my phone. That worked for a while now. So just bear with me a sec, guys. I got to try something because I'm on one computer screen and one Wi-Fi, so I'm very hobbled. But just give me a sec.
So John is asking, is Think Capital one of the few choices for me as an American to trade minors and crosses? It depends whether you're trading prop or with a broker. If you're trading prop, yes, they are the best one in my opinion, because you could trade off of TradingView. And I've got a link. Once Boris starts talking, I'll send you a link for 10% off. But they have TradingView access, which is really, really good. If you want to trade broker, then there's many. There's Oanda, there's Trading.com, there's Interactive. There's Thinkorswim that allows you to trade FOREX. So there's quite a bit. The community is completely free. So once you join the community, that's if you want the indicators, JB. If you click Let Me In, it should let you into the community. So I had a question about what about final GDP out of the U.S. Revisions to, okay, this is what I want you to remember. Revisions to GDP are not market moving at all. Revisions in general are difficult to handicap for any piece of data, but it's not market moving. Yes, CAD-yen is really great moves. Peter Zahan is a geopolitical analyst that I read daily. Who is Peter? Let's see if we can find something new for all of us while Boris is figuring out his tech issues.
So you guys, you clearly, I'm looking at on YouTube. You're not seeing my charts here, right?
We are not seeing your charts.
Yeah, I don't know what's going on here. Hold on a second, guys. I am.
So Peter Zahan is who?
No, now you're seeing my charts. Now I think you.
We are not seeing your charts yet, Boris.
Okay, hold on. Maybe this. Wait, remove, add to stage. Are you seeing me? Are you seeing the charts now? I'm seeing it in the.
Anybody seeing it? I am not. Say yes or no if you see his charts. No charts. I am not either.
Wow.
If you look at the StreamYard in the lower right, Boris, you can't see.
I see myself. I see the charts in StreamYard.
Huh.
That's why I'm confused. What's going on over here?
I don't know. But Peter Zahan, while Boris figures out his issues, Peter Zahan is who John recommended. Thank you, John. You're our MVP today. I'm gonna watch this video. Oil markets aren't worried about Iran. I'm gonna watch it and hear what he has to say. How long is this video? It's not a link to the video. You have to figure out where it is. But we'll figure out where it is and see how long this video is. But I got a question for you. I've talked to someone that I had met while we were in Cyprus who told me that he filters out videos that are longer than 5 minutes. And I want to ask you, do you also filter out videos? Do you, prefer videos that are less than 5 minutes, longer than 5 minutes? Do you not care as long as the information is good? You are getting a screen that says $75 to access the community. Let's do this together and see what happens. All right, Kathy, Lien, because maybe there's a glitch. All right, I'm gonna put my bastard account that I never use. Let me in. Okay, let's see what happens. Okay, so you click this. It should let you in. Your access is on its way. So the access will be sent to you in your inbox. So you can watch this, you can close it, but you're in your inbox. You should get an email that says, that gives you access. I'm actually going to check in my me account to see if I've gotten the email, but this is just information how you get the indicators, but you will be getting your email and how to access the community very, very soon. I'm just refreshing my email. Do you want to show? I see something from you, Boris.
I'm trying to figure this out just because it seems like
looks like you're
yeah, it just give us. Oh, it's finally. Is this? Are you guys seeing the wealth charts? I'm not.
Yes,
I'm
we are seeing your wealth chart screen.
Okay, but I'm trying to log into this thing because I'm now moved over to my phone.
So Tom says, I don't care about the length. Riven says 25-minute videos are the max for me. I don't, that's very long. I don't watch 25-minute videos on YouTube. I like videos that are less than 15 minutes. Anyone else have a take on the length of time? I normally don't like videos, but if it's good from someone like BK, I'll watch. Thank you so much. Okay, so I actually got my access. And so I'm going to forward this to my Gmail, which I'm actually logged into because, as I said, my other one's my bastard account that I never look at. And one second. I'm going to show you the email that I got after registering myself. So while Boris does that, I'm going to pull up my email.
I'm just having all sorts of issues here. It's just not loading my charts. Let's try this. Share. No, it's not loading these guys either.
Okay, I'm going to show my email, Boris. If you don't mind, I'm going to remove your screen. So you guys said you got so I waited like a minute or two. Then I got this email that says, welcome to our community. And then you can click on enter the community from there. So yes, you saw that $75 information and how you can get the indicators, but you are still getting free access. You can enter the BK Tradings community, click on that link, and boom, there you are. So I showed you exactly how to get into the community. Markets are tanking. Let's see. Markets are open and they're falling. Are they tanking? I mean, sort of 0.35%. But are you surprised? I mean, basically, this shows you that investors are still nervous. And looking at the headlines, Iranian retaliation could happen in a few days, but that's from FOREX Live. That's not from like a official resource saying that, from Iran saying that. So there's no new headlines from there. I think it's just the market's opening, and all those sell orders people put in overnight is being triggered through, and that's what's happening.
Guys, you know what? I'm afraid the Wi-Fi is just not strong enough here, and my cell phone. I guess they must have started to throttle me because I started to use a lot of the IP. I just can't get my charts to go. So I don't think. I just wanted to let everybody know that we may not be doing live trading for a couple of days because I'm off the road on a personal trip here. So I will, keep everybody informed on BK Trade, YouTube /BK FOREX website. As always, go look, check our YouTube stream to see if I schedule anything. But if I'm not scheduling, it's because I'm just simply out of touch. I'm out of the strong internet. Hopefully by Wednesday, I'll be back to strong internet and start trading. But it's just impossible for me. I can't get anything going, so there's no point in us giving it a try right now. I'd rather not do bad internet trades with you guys. Over the weekend, I actually did manage to pass another prop test. I mean, last night I passed another prop test. I'd love to tell you all that stuff. I hope you guys are doing really great trading the dots. The dots have been just unbelievable money for us. We'll just have to reserve the next live trades for when I get better internet. But unfortunately, this is I really thought that we had enough strength here in the hotel, but it just doesn't seem to want to be able to get me to. I'm going to give it just one more time. Let's see if I can load it. And if it doesn't come in, let's see if this will give me one more.
And while Boris is doing this, as I said, this is an evolving situation. So stay on top of everything you do. Subscribe to the channel. Make sure that you join our free trading community, because I will be posting videos and updates throughout the course of the week as the situation evolves, because this is going to be a headline-driven market this week. May it be the war, may it be Powell, and maybe tariffs. We will have to see. But thank you so much, JBC. I'm so glad that you listen to me every day. I really appreciate that.
Yeah, guys, I'm sorry. Nothing seems to be loaded on the charts. The travails of being on the road. My apologies, guys. But I hope you guys are all enjoying everything that's going on as far as the tool sets. I hope you guys are really enjoying trading the dots. I'll obviously have a ton more content for you guys when I get back to.
Yeah, and maybe you can share a video on trading the dots for us, because so many people don't know what this trading the dots you're talking about.
Exactly. Maybe I'll post like a short video on the channel today, just kind of explaining to you, what I traded and how I was able to bank another $25,000 account. I want to leave you with one final idea, and this doesn't even come from me. It comes from Rob Hoffman, who runs Rob yelled at me properly over the weekend. I'm trying to. I can't even put up my Apex link in here. Nothing seems to be coming through here on my internet. Anyways, go to Apex.
Boris is gone. It's all right. Bid adieu. Thank you so much for joining us today. And, like I said, lots going on. Let's make sure you stay on top of what are my thoughts, because I'm going to have a lot of them throughout the course of the week. Otherwise, have a great day.